Hello, and welcome to this session on analytic innovation in anti-money laundering. My name is Beth Herron, and I manage the Americas AML team here at SAS within the Fraud and Security Intelligence Division. I'm excited to be joined today by two of my esteemed colleagues, Amari Alvarez, Advisory Pre-Sales Solutions Architect, and Mason Wheelis, Senior Systems Engineer. Financial crimes professionals have a lot of challenges today. They must understand who their customers are in a digital environment. They must detect elaborate money movements designed to hide illicit funds. They must empower their investigative units to make data-driven decisions faster, all while keeping up with changing regulations, new faster payment channels, and typologies that are always changing. In order to stay one step ahead, SAS is empowering financial institutions by providing our full breadth of data engineering, artificial intelligence and machine learning, and visualization to modernize programs responsibly. SAS supports the full analytics lifecycle, allowing FIs to operationalize both SaaS and open source strategies quickly, all while monitoring performance so that we can understand when strategies have degraded and tuning and retraining is required. Our modern API-based architecture allows us to integrate into an ecosystem, and that allows financial institutions to automate manual processes all across their workflows. Today, we are going to highlight a few areas: use of open API framework to orchestrate third-party data calls, enhancing our decision-making process, entity resolution, leveraging data management, and machine learning models to detect complex money movement patterns. SAS gives you a complete view of events and supports decision-making across the customer lifecycle, from application to authentication to account use. In a moment, we are going to provide a demonstration that walks through how SAS automates controls all across the customer journey. We will start with a demo of a typical onboarding step for a checking account. We will look at multiple signals to verify know your customer information and establish if this is a customer that we want to onboard. We will demonstrate an example of denied application as well as a successful one, which we will follow across the customer lifecycle. Next, we will fast forward 90 days into the future to a customer due diligence review. We have persisted the information that was collected at onboarding and refreshed it through the course of our investigation. In this example, a visa has expired, which will cause us to take another look at Joseph Hudson. Finally, we will show you how to review a recent transaction that points to unusual behavior for Joseph. And with that, I will pass it to Amari to walk us through the customer onboarding.
As Beth said, today we're going to walk you through a customer journey from initial application request through account use. Throughout this journey, we'll see how SAS's advanced anti-money laundering solution applies innovative analytic strategies to protect financial institutions from risk. We'll begin this journey at the account opening stage. One of the best ways to mitigate potential compliance risk is to detect suspicious activity during the account opening process and decline customer applications when indications of fraud or risk are high. We call this strategy shift to the left detection. We can leverage third-party data providers to inform our account opening process and enable early detection of risky applications while reducing friction for legitimate applicants. SAS provides real-time orchestration of best-in-breed data providers across areas such as digital identity and device intelligence, device biometrics, individual authentication, and AI and machine learning-based identity verification. The goal here is to make sure the applicant is who they say they are. Let's see how we do this. On the left side of the screen, we see a typical new account application web page where prospective customers enter their information to begin the account opening process. And on the right side of the screen, we'll show some behind-the-scenes communication with third-party data providers, which SAS will engage. Together, the aggregated feed from these third-party data providers enables us to enrich the application request so we can make a better customer onboarding decision. Let's start by entering a new account opening request for Jane Doe, who lives in a small town of McKinney, Texas. We'll fill out the form and hit the Submit Application button to send it to the SAS solution for analysis. Within about 1 second, we have an approved decision for Jane's application. But what really happened in that short time span? We see on the right-hand side that Jane's information was sent to 6 different third-party partners via APIs, and their results have been incorporated into the final decision. Hundreds of separate data points regarding Jane's location, her device history, and current IP address, how she's using her mobile device, and the correlation between her name, address, email, and phone details have all been analyzed within milliseconds. SAS processes this enriched data through a machine learning model and business rules to determine if the application should be approved. In the end, no significant risk condition was detected, and Jane's application is approved, and she can continue her customer onboarding activities without delay. Again, all this took place within about 1 second. Now let's submit Jane's information again, only now we'll do so by copying and pasting her details into each of the text boxes. This type of data entry is similar to what bad actors would do when entering data from a spreadsheet of stolen customer identity information. We'll enter the exact same information and once again submit the application for analysis. Now, although the customer details are entered exactly the same, we have a different outcome. In this case, the application was declined. The use of sophisticated device biometric analysis, where the user's keystrokes and mouse movements and device orientation are all analyzed, allows us to detect suspicious activity during data entry. In this case, the sequence of advanced key combinations for copy-paste operations indicates a low familiarity with the data being entered and the likely import of data from an external source. This behavior is flagged as an anomaly, leading to a high-risk score on the application request and a final decision to decline. Now, as application requests come in over time, we can build views that help us analyze the performance based on historical trends. For example, here we're seeing device IP addresses used to geolocate application requests coming in from around the world. We can calculate the average daily applications seen from various countries and use this information to help us spot anomalies. As we move our time slider to focus on more recent applications, we see the pattern of new applications change. Application rates from China, Brazil, and the Netherlands are all above their historical norms. Nearly 750 applications were seen from China in one day, whereas their daily average is just 30. That's 25 times the expected value and a clear deviation from the typical behavior. The Netherlands is originating 5 times its expected number of applications. Again, this is an anomaly, and we can apply SAS via analytics to drill deeper into the data and help us understand why. Here we notice a spike in applications from the Netherlands around 1 p.m. in the afternoon, and it's interesting that the volume jumps so drastically at once. We can use an unsupervised machine learning model to determine what caused this spike. Here we apply a model based on 3 data variables obtained from the applicant's digital devices: the applicant's device OS, the applicant's browser type, and their screen resolution. By selecting the time around the spike in the applications, we can gain insight from our model. Here we see that the application, most of them are associated with a Windows XP, a very old operating system, an unknown browser type, and a very low screen resolution. Usually, this particular combination is highly predictive of the use of bots. Bots actually don't care about poor screen resolution, whereas real customers do. Now we can infer that the unusual behavior we're seeing is due to automated bots issuing application requests. And then armed with this new insight, we can deploy our model to detect and decline future bot application activity. Now, let's go back to our real-time application request page. Let's submit a new application request for today's main demo protagonist, Joseph Hudson from Raleigh, North Carolina. Joseph's application request was analyzed and approved immediately. Let's take a closer look at the details behind this decision. Here, we show a simple representation of the response data from one of our data providers, Secure. We see there is high correlation between his name and email information, with his email address having a history of over 2 years. So this isn't some auto-generated fake email address. There's also high correlation between his name and phone information, with an indication that he's using a premium phone device on a major US telecom carrier. This isn't some prepaid burner phone that was bought within the past few days. His fraud risk score is low, showing a detected presence among social networks and other online sites, and his KYC details have high validity scores for his full name, address, and date of birth. Overall, this is a positive CIP check with low fraud risk and low device risk. Joseph is considered low risk at the time of onboarding, and his application is approved. We'll turn it over to Beth now to follow Joseph Hudson as he continues his customer journey with his financial institution.
Amari illustrated initial onboarding where Joseph Hudson was successful in opening a checking account. After onboarding, we apply a risk rating, band, and monitor for any changes that would warrant an enhanced due diligence review. Taking an event-based approach, we can address changes in risk very rapidly. My persona is that of an enhanced due diligence analyst. Here on the homepage, we can see the output of our customer due diligence program, which contains queues of high, medium, and low risk customers. Let's dive into that high risk customer queue where we can see the customers who've been surfaced for prompt attention. When I navigate to my alerts, I can see that an alert has been created on Joseph Hudson. Joseph has a current score of 404, which has escalated him to the top of my workbench. When we take a look at his account activity, we can understand why. In January, Joseph was successfully onboarded, but due to some attributes, although low, he was slightly higher risk due to non-resident alien status, citizenship of Haiti, and a new relationship to the bank. In February and March, no material changes were observed other than the age of his accounts increased. But in April, we flagged his account due to an expired visa. Within this CDD review, we can go ahead and open the workflow for an enhanced due diligence review to take a deeper look. We'll start off by providing a name. And then next, we will tag any associated artifacts that were collected during the investigation, add a quick description, and then we will start the workflow. Now, within our enhanced due diligence review, we can take a deeper look at Joseph. We'll start off by taking a look at that account that was opened during that initial onboarding. Here we can see the details of Joseph's account, the date it was opened, and any other pertinent details. Let's move on to the customer profile. Here we can see information associated with his SIP profile. A few things to highlight. He works in accommodation, has a modest income. We see that citizenship of Haiti, and we can understand the type of visa that has expired, which is an HB2 visa here in the US. We can also see his original review date. Traditionally, financial institutions have set a periodic review date based on risk policy and band. So for example, we may refresh the customer relationship every year for high-risk customers and every few years for lower-risk customers. Leveraging third-party data and continuously risk rating our customer population, we can automate and address issues that breach our risk profiles much faster. So the information we've reviewed has largely been from our internal systems. What we're going to do now is enrich this enhanced due diligence review with third-party information. When I do this, you'll see that several new tabs have appeared. First, we're going to take a look at identity verification. We have persisted the information from onboarding, and here we flag any new information or pertinent changes to the enhanced due diligence investigator. Next, we've pulled employment information, which confirms his previous employment and that he is no longer employed. And then finally, we've surfaced documentation associated with his profile, and here we can see that expired visa. Once we have completed our review, we can make a decision regarding how we should treat Joseph's profile. We can maintain his ranking at high, lower his rating based on risks observed, or ultimately exit the client relationship. It's important to highlight that we also retain all of this information and persist it so when, or in our case, if or when Joseph is flagged for suspicious activity, all of that information can be used to make an intelligent, informed decision. And with that, I will pass the ball to Mason to take a look at the account usage associated with Joseph's profile.
So the next leg of our journey, as Beth mentioned, is account use. On the screen, you can see the alert queue associated with transaction monitoring. And at the top of the queue, we see our friend Joseph Hudson with 2 scores associated with him. A score of 850, which is an aggregation of all these scenarios and model outputs associated with him, and then a score of 998. So the score of 998 is a priority score. This is an embedded model that uses semi-supervised learning techniques for alert priority scoring. The model creates a predictive post-alert score that represents the likelihood that an alert is productive. And so now that I know Joseph's at the top of my queue, using both scores, I can see that he is the riskiest alert in my queue. So I will drill into him and start getting more details about his activity. So I'll double click into Joseph, pull up his alert details page, and then the first tab I'll go to is a scorecard. The scorecard tab shows me all of the risk associated with Joseph. So clicking on scorecard, we can see 5 scenarios here. If I look at the bottom 3 scenarios, these are your more traditional type AML scenarios. So I can see things like activity dominated by wire transfers, excessive transfers with unrelated parties, and party velocity of volumes deposit and wire withdrawals. So we can see that this individual, our friend Joseph, is quickly sending out large wires to unrelated third parties. But with the use of third-party data, we're able to unmask the identity of these unrelated third parties. So by enriching our transaction data, we can identify the unrelated third parties as VASP or Coin Exchange. So a VASP is a virtual asset service provider that facilitates the buying and selling of cryptocurrency. So this third-party data source provides the banking information for Coin Exchange or VASP, along with various risk ratings of the VASP. We can then use this banking information to map the data into our AML data model to let us know more information about the other side of an inbound-outbound wire. We can also use provided risk ratings to create scenarios to monitor our customer base's interaction with risky VASPs. So in this current alert, we can see this individual is transacting with the VASP with a KYC score of red. This indicates the exchange allows any daily deposit or withdrawals with minimal to no KYC. Another scenario we have here is unusual wire activity model. So this is a model we have embedded into AML to monitor for unusual wire activity. So we're using a SAS Python ensemble model to analyze our wire activity, and we'll create an alert when we detect unusual activity. So the next tab I'll go to is our alert activity tab. This is where I can see even more details about the scenarios that fired, and also shows me the transactions that led to those scenarios being triggered. So I'll click on alert activity and learn more about the transactions that triggered the various scenarios. So the highlighted transaction here, large cryptocurrency transactions involving a risky crypto exchange, I can see down below the actual transaction that triggered this. And I can also see in the message text, this is one risky crypto transaction, and also the total amount associated with that risky crypto transaction. I could double click in the transaction below and pull up additional details about this. Another functionality I want to point out here is our ability to allow investigators to rate the productivity of individual scenarios. So I can select a scenario, rate the productivity, say it's productive, unproductive, or indeterminate to my decision. And what we do is capture that information and use it to feed things like our priority scoring model. So we take historical data like productivity rating of scenarios or dispositions or creations of SARs. All that historical information feeds our priority score model to let you know the likelihood future alerts will be productive. So the next tab I want to go to is our workspace tab. So our workspace tab allows us to pull objects out of the system and kind of manipulate them. So here I'm in my network view. Here I can see all of the objects associated with our friend Joseph. So I can see his account information, who he's householded with, his different addresses. But more importantly, I can see his account and all of these transactions flowing out of his account to this external party. Well, I want to get more details about this, these individual transactions. So what I can do is show transaction details. I'll zoom in a little bit. And I'll click on this dotted blue line. And down below, I can see the individual transactions flowing out of Joseph's account into this external party. And I can see things like, when this happened, the party number associated with the different account numbers. So I get a lot of rich details about the transactions flowing out of one account to this external party. And now what I want to start doing is learning more about this external party. So typically without the enrichment of third-party data, I have few information about this external party, maybe just what's in the wire instructions. I can just see his organization, any kind of phone numbers or external party account numbers. But because we've enriched this external party with third-party data, I'm able to get a lot of information from that third-party data provider. So over to the right, I can now identify this unrelated third party, as a VASP or coin exchange, like I mentioned before. I can see now his common name, his legal name, any associated URLs, his category, where he's domiciled at, his bank name, his SWIFT, and when this record was last updated. And then to the right, I can see risk ratings. So this gives me all of the risk ratings on this coin exchange or VASP. So KYC grade we talked about before. What we do is regularly assess exchanges and other virtual asset service providers for adherence to best practice KYC policies. And then they're rated on a following scale. Green means that there is strenuous KYC practices. Yellow means the exchange will allow deposits and withdrawals up to a specified dollar amount with little to no KYC. And then red means there is minimal KYC. We can also create monitoring strategies around other metrics that we return. So for example, received and sent high-risk volume. So what this is a USD equivalent volumes that this entity, this coin exchange, has sent or received from risky entities. So some of those risky entities are things like ransomware, high-yield investment programs, malware, high-risk exchanges, gambling, darknet, and criminal. We can also see other data elements we can create scenarios on. So trades in fiat. A yes in this category means that the entity has actual fiat crypto trading pairs. Direct, indirect, off-ramp. So all of these are just different ways that this exchange allows you to fund the account. Is it direct deposit? Can you do a third-party intermediary? Can you withdraw directly from the exchange? So this gives us a lot of great data elements to start building transaction monitoring scenarios on. So next, I know in a production-like environment, these networks get very large, like 500 nodes or maybe even more. So what we do is give you tools to dissect and analyze these networks. So for example, I'm going to calculate centrality here because I want to know which nodes have the highest level of influence to other nodes in this network diagram. So I'll click influence 1 centrality, and you'll see two things happening. You'll see the nodes in the network getting bigger and also a score associated to the right. And so the two nodes that have the highest level of influence are our friend Joseph's account and this external party. So if this was a large network diagram, what I can do is apply centrality and understand which nodes to focus my investigation on. This is a great tool for your investigators to be able to dissect network diagrams and explore relationships they might not normally see. So next, I can apply disposition. And throughout this entire customer journey, account opening, monitoring, and use, we can apply advanced analytics and enrich our existing data sources through every step to provide a complete view of the customer and allow investigators to make timely and appropriate decisions. So with that, I'll hand it back to Beth to close us out.
Thank you, Mason. Analytic innovation within AML has allowed us to orchestrate data from both internal and third-party data sources, persist information throughout the customer journey, and leverage advanced analytics and machine learning to detect complex AML behaviors that are otherwise difficult to detect. Creating new insights by bringing the right data together at the right time enables more accurate decisions. Using this framework, SAS is able to build controls that ensure compliance across the customer lifecycle. And here we can see this in action. In one example, our customer improved denial rates for new applications by 50% while driving an ROI of 5.7x. We've also seen AML typologies replaced with a single machine learning model, producing 50% reduction in alerts while providing better coverage for suspicious activity reports. In another example, intelligent segmentation provides a 5x improvement in SAR conversion rates. There are many points in the customer journey where SAS assists clients in modernizing their AML program, whether it's shifting to the left to stop fraud at the application level, better monitoring of customer due diligence to improve ongoing risk management, to managing fraud and financial crimes during account usage for detecting risk within monetary and non-monetary instruments. Financial crime is becoming more complex, and we at SAS are excited about the innovations that are allowing us to stay one step ahead. Thank you.